right into it. Why did I start investing in the stock market, right? There was this one time that after I got done with college, I was listening to the news and I heard something was going on with Greece. That's why it's just thing at the bottom. Greece is looking for a lot of money. So there was a bunch of stuff going on. And I just heard that all the stocks in the world were going down. And I was like, oh, this must be a great time to start investing. So I just went in there, bought a stock, went on YouTube actually. YouTube was my best resource for learning anything. I went on YouTube and there was so much information, right? And that's the problem when you go online, there's like so much information, you're not even sure where to start from. And I was like, you know what, since I know where to start, I'm gonna just start. So I got the app, which I'll talk about in a second, and I just bought a stock. I put in $100 in the app. I bought a stock. I didn't even know what it was, but it's called Altaba, which you shouldn't do, first of all. You shouldn't just buy a random stock, but that's what I did because I didn't have any direction. I didn't have anybody telling me what was going on. So I bought it, and I was really lucky because like a month, well, the next day, I bought it at $30. The next day, it was $32. So I got so excited, I'm feeling. And I think that in itself got me really encouraged to keep doing it. Because if your first trade goes up, you get so excited, like, I can't wait to make more money, right? But if your first trade goes down, or first investment goes down, you can kind of get discouraged and be like, oh, this isn't for me, I have bad luck. So just on that note, whenever you guys start investing or trading, if your first one doesn't go as well, don't be discouraged, right? You probably have better luck next time. But I sold it a month later for like $33 just because I was like, I don't even know what I'm doing with this stock. Let me be more intentional. Just my luck. The stock closed. This so eventually, if I kept it till like I think it was 2018, I would have had $74. But no, it's whatever. Next slide. So, what is a share? When they say you have a share or you have a stock, what does it actually mean? What it means is that you have ownership of a business. Now, back in the day, whenever you bought a stock, they would actually give you a certificate that, oh, you own a certain percentage of this company. But now it's all digital, right? We all get stocks through an app. And it also gives you voting rights in some companies. And when you see a share, you can see a share that's $5, and you see another share of another company that's $1,000. It doesn't necessarily mean that company is stronger than the fewer shares in the market than another company. So if you see a company that has, like Amazon, it has the shares is $1,000. The shares is actually $2,000 today, and then you see Ford, and the shares is actually just $5. It doesn't mean Amazon is like 200 times bigger than Ford. It just means that Ford has more shares out there. So the more the supply, the less the price. Yeah, so if you own one Apple share, it just means you own one out of a million of the company that is Apple. So why do companies sell shares, right? Whenever, say you're a company and you have the right to give someone ownership of something else and just a little bit of ownership so they give you back money, why won't you do it, right? Say Boeing needs to develop a new airplane, and they need money to develop that new airplane, right? Because they're not gonna sell the airplane until like 5 years later. But for those 5 years, they need money to pay their employees, to do all these things. They'll sell their shares. So you give them money, and they can use that money to invest in the business, use that money for research and development, use that money to do whatever they need to grow as a business. And sometimes they just need to, sometimes when a company goes public, and going public means you were a company owned by somebody, right? Or a group of people. And then those people want to get their money back. So they sell shares and they lose some of their ownership of the business. Say me and my best friend decided to start a company, right? And then 3 years later, that company has grown into such a big thing, but it's still just me and my friend that own that business. So all the money in that business is ours. So I'm like, you know what? I want to start selling shares. So I tell everybody in the US that, hey, you guys can invest in my business and own some of my business. So before I was a 50% owner in that company, and then and say I'm worth like $1 billion, I can sell half of my shares. So I only own 25 and sell the other 25% for, what did I say before? I was worth $1 billion, so I can sell the other share for $500 million. Because when, say Jeff Bezos, he's worth like $1 trillion. No, Jeff Bezos is worth $100 billion, but he doesn't have that money in his bank. He has that money in the value of his company. So if Jeff Bezos wants to actually get that $100 billion, he has to sell all his shares to people, and then he has the money in the bank. So it's basically a way that some owners of businesses try to get money in the bank as opposed to just value in the company. And as I said, in the case of Boeing, they sell shares to free up cash for specific projects. And they can actually buy back those shares after they're done with the business, with that project. Now, I wanted to talk about this because when you start listening to the news about stock market, you hear about the the Dow Jones, you hear about the NASDAQ, you hear about the S&P 500, you might hear about the FTSE 100. And these are common words that they use when they're talking in the news. And what they basically mean is they're an average of a certain number of companies. Say you take, I believe you all know what the concept of average is, but say we take like 5 companies and we average out their stock price, and you plot the average for a specific number of times, you can get a chart from that. So the NASDAQ is basically the average of 100 tech stocks in the US. The Dow Jones is the average of 50 industrial stocks in the US. And the S&P 500 is an average of 500 stocks, 500 specifically picked stocks in the United States. So whenever you hear that, it just means that it just gives you an idea of how that industry is doing. So if they say the NASDAQ is down today, that means a lot of the average of tech companies, their stocks went down, their value went down. When they say the Dow Jones is down today, that means the average of the industrial companies in the US is down today. And the Dow Jones consists of a lot of big companies like Boeing, Microsoft, Nike, McDonald's, the big names in the United States. So if they're all down, that means the economy isn't doing that well that day. And we'll talk about that more later. But the FTSE is a similar index that they use in England. And I'm not in England, so I don't really know much about that. So how do you buy shares? This isn't the most updated slide, but this is what I use. I've used Robinhood to invest shares in the past. Oh, is this? Oh yeah. So I use Robinhood because I'm in the United States. So if you're not in the United States, you can use other apps. I heard Wealthsimple is one that works in Canada, and Jennifer knows a bunch of them. But I use Robinhood, and I also use TD Ameritrade. I don't use it as much. But Robinhood is really great because it's really user-friendly. It's really beginner-friendly. And it's just great. And if you want to make a Robinhood app, I think you have to be in the United States. I mean, if you want to make a Robinhood account, but I have a referral code, so you can hit me up and we both get a free stock. But it's also great because it doesn't charge you commissions. And this was actually a screenshot from my account in 2018. And it said I had saved $1,400 in just commissions. And commissions, as you should know, is when they charge you a fee for every time you make a trade. So it seems like I made a lot of trades recently. I mean, by then. But yeah, if I was using, one of these other apps that charge commissions, I would have probably spent $1,400 in just trades. But I think recently, as of 2019, a lot of these other apps that's the poll. A lot of these other apps stopped charging commissions.
Sorry, Adedolapo, to cut you short. I finally figured out how to get the poll to work. So you guys can just answer the questions while he's chatting away. Then I'll share and I'll end it when everyone's done. Sorry, you can go on, Adedolapo.
All right. So yeah, how do you buy a share? You want to download one of the apps that work in your region. As for me in the United States, it would be Robinhood. And then you fill out all your information because they're going to ask for like your name, your address, your social security, all your personal information. And sometimes it takes a while before you can start trading. But I mean, for me, it's been worth it. Back in the old days, people actually used to go to the bank, meet a share broker or stockbroker, and then like they get a certificate that they actually own a certain number of stocks. But we're in the 21st century, right? We don't do any of that stuff anymore. That's why now this is in hands. Back then, millennials wouldn't be able to invest. It was only for the old people. But right now, it's a new wave of us young people investing and securing our future early. But yeah, and there's also, you could also, if you have good connections, or if you work in a company that's about to start selling shares, they can sell it to you directly for like a super low price. If you work at one of these tech companies, they usually give you stock when you start working there. I think that's all on this slide. Are we okay? Questions are after?
Yeah.
Yeah, write the questions down. So when you start trading or when you start investing, you need to choose your strategy. And I think it's important for me to tell you guys the difference between trading and investing. I consider myself an investor and not a trader, because when you're a trader, that means you're constantly making new trades in order to get money. And I don't as much. I try to spend some time researching on a stock, making my decision if I'm going to buy it. And when I buy it, I usually keep it for a long time. I say like 9 months at least, maybe 6 months to like a couple of years. And there's some stocks I have now that I never sold for like 5 years, just because I have faith in them. So yeah, you need to determine what your strategies. And I think Abraham is going to talk about short term, but I don't do so much as much. I dabble into it here and there, but it's not. It's. I won't even talk about it. I'll let him talk about it. But yeah, you want to determine what your strategy is. If it's short term, it's going to be for a couple of days. High risk, high reward. You can trade options. You can be a swing trader. And you can talk about that. There's medium term, which is not really a thing, but I just coined up the name. But it's like a couple months, which I do sometimes. So 6 months, 5 months, which is something I'm actually doing now because of the coronavirus. And I think I'll talk about that later as well. And you can also decide to do long term. How am I doing on time? Ooh, not very good. When did I start? Anyways, yeah, you could decide to do long term, which is like what I've been doing, like a couple of years to a couple of decades. These are some tools that I use, so you guys can write this down or note them in your head. But these are just some websites that I go to do my research. Yahoo Finance shows you the charts. StockTwits is it's like a Twitter for stocks, so you hear what people all around the world are saying about a certain stock, and it's really been valuable because people tell you their speculations. And it's one of those things you have to filter out, because you might go on there and someone says Amazon is going to go to 2,000 tomorrow, and then the next line someone says Amazon is going to go to 500 tomorrow. So you get a lot of noise, but you have to use use the education you have to just decipher which of them is noise and which is actually credible. I read companies' earnings reports, so they report how much they've made every quarter. So I try to read in that and see how the company is doing and see if they're still worth investing or if they're worth getting into at that point. I don't really read books because I don't know, but these are some books that I heard are good. And so if that's your thing, you can read those. Investopedia is like the WebMD. That's where you go to for all your medical needs. This is like the one website that you can go for all your investment needs. They're really great. They have some simulators so you can trade paper money before you start trading. It's a great website. And then my favorite, YouTube. YouTube has everything you need. shameless plug, I actually have a channel where I talk about stocks. So you can go to my channel. It's called Minute Invest. So
I'll
yeah, like and
link
subscribe.
that in the chat as well for everyone.
Yeah, appreciate it. But yeah, that's one. You can definitely watch other people, but I think I'm funnier than them, so you make your decision. Next. So I just decided to bring in some pictures of some charts, some stocks that I've bought and some stocks that I haven't bought, and just tell you what I've been looking out for in them. Do you guys see my cursor? If I can try to point out.
Yes, I see it. Oh, I see it.
So trying to think, how much time do I have left first?
Probably have about 10 more minutes, maybe.
Okay. I'll talk about this first page and then I'll talk about the coronavirus. Right. So NVIDIA, if you know NVIDIA sells graphics cards. It's a stock that I was looking into buy. I bought it for a short amount of time, but I'm not sure when I bought it. But anyways, NVIDIA had been around, it'd been worth about $50 for a long time. And then all of a sudden they started going up. And I was like, why are they going up so much? This was the time that cryptocurrency was doing really well. Bitcoin, and everybody was mining it. And if you know about mining it, you need a graphics card to mine it. You need a graphics card to mine it. So their graphics cards were selling like hotcakes. And so their stock went from pretty much $40 to 200 and something. Right. And it's just one of those things that you should be aware of. If you had known cryptocurrency was going to go up, you would have known that NVIDIA was going to go up and hop on that wave. If you hop on waves, pretty much. It went up because cryptocurrency was doing really well. And as this decline in 2018, 2019 was when crypto pretty much crashed and people weren't buying the graphics cards so much. And then, it started normalizing. People just started mining a little much more again. And also at this point, regular people weren't buying the graphics cards because it was getting too expensive. But then it caught on and people started buying it again. So you need to know how that company makes money. You're not going to invest in a company that doesn't make money. When I bought Yahoo, I had no clue how Yahoo made money, right? If you're buying Facebook, you need to know how Facebook makes money. Facebook is pretty much a advertising company as opposed to social media because they make all their money from advertising. So you need to know who is making that company money, how's their revenue stream coming, what is the prediction of that avenue in the next couple of years. And Boeing is another stock that I bought. I worked there, but they didn't give me free stock, so I had to buy it by myself. But I had chosen to buy Boeing at a time where, when did I buy Boeing? Anyways, I knew the prediction, and it was public, right? I can't trade based on information that's still within the company, but I can trade on anything I see in the news. And I saw in the news, which I didn't even hear, that they were buying back stocks in 2016. So they were so basically this is what I said. When they have a big project to work on, they can sell a bunch of shares. So they're working on a new airplane, which is the 737 MAX. Don't ask about it. But they were working on that airplane, so they sold more shares to get money for that project. And then when the project was done and they started selling the airplane, they had more money in the bank. So they started to buy their shares back. And when you buy shares, the shares become more, the supply becomes less, so the price goes up. So as soon as I saw that Boeing was buying back shares, I decided to buy some shares. And that was in 2016, which was around here. And the stock price then was about 140, if I remember correctly. I bought it at 140. And then after the buybacks, it just started going up. And if you would notice here, it peaked at over $400. I sold way before that, but it peaked at over $400. So if you were a smart investor then, you would have bought the stock at 140 and made like 420, which is, I don't know how many times, it's like a 3 times return on investment. And then over here, you can see that at like March. Oh yeah, this drop from 400 was when the Ethiopian Airlines crashed. last year. And you can see since then there's been a decline in the stock price just because the company stopped producing airplanes, right? Or stopped selling airplanes. And then over here from 350, you can see a decline, and that's because of the coronavirus, because obviously the travel industry has been affected a lot by that. Which is a good segue to the reason why I started talking about investing in stocks recently. This is a great time to buy stocks, in my opinion. Different people have different opinions, but I think because everything is at such a low price, like Boeing, for example, Boeing stocks are currently 124. I believe Boeing is going to go back to this 400 level eventually. It's not going to be next month. It's not going to be 6 months from now. But who knows, in a year from now, 2 years from now, I really think they're going to go back to around this $400 region. Everybody's just scared right now because of the coronavirus, but it's going to go away eventually and everything's going to return to normal. So a stock like Boeing is going to shoot back up to 400. That's why I think it's a good time to buy. If you buy it now at $124, I'm not like recommending Boeing specifically. I don't like to recommend stocks to people so they don't come and beat me up if they lose money on that trade. But I feel like Boeing is going to go up to 400 back eventually, personally. Maybe in 2 years, who knows? But there's also a risk that because right now Boeing is not selling airplanes, they could run out of money to pay their employees, and they could go bankrupt in a couple months. And in that case, you're going to lose all your money. So that's the risk that you have to take into account when you're buying stocks. This stock right here could go right back up and you make 4 times your investment. Or it could go right back down and lose all your money. So that's something you want to keep in mind when you're investing. So do not invest your rent money, okay? Do not invest your rent money. Do not invest your food budget. No, keep all of that stuff in. It's, as I said, if you have extra cash, that's when you invest money. You also want to have your savings to live a couple months without your income. When all of that is settled, then you can come invest in the stock market. Like I said, my philosophy is not quick money. It's long term, right? All of these trades, like if you invest in Boeing, it'll take a couple of years for you to make good money. All of these require a couple of years. Now, next one I'm going to talk about is one that didn't do so well. Snapchat. Everybody got so excited in, what year was it? 2017, when Snapchat changed from being a private company to being a public company. So as I had said before, there was a time when Snapchat was owned by one guy and a couple of investors, right? And because those guys wanted to make their money back, like they were worth $1 billion, they were worth whatever they were worth, right? But that money was only in the value of the company. They didn't have it in the bank. So they decided to sell shares, and the people that bought those shares gave them the money. Then they had that money in the bank rather than in just the value of the company. So they sold the shares. Anybody could buy them. People got so excited and bought them for like $25. As soon as it came out, it was $25 or 20. It was about $30. It was 29 actually, specifically. I remember because one of my friends was asking me if they should buy it, and I said they should. I said I wouldn't buy it because there's a struggle in social media to find advertising space and to also have good content. Snapchat was struggling to advertise. They have limited places that they can advertise, while Facebook has so much infrastructure to advertise. But anyways, I didn't buy Snapchat. They were trying to do in the next couple of years, and I just didn't buy it. So I didn't buy the stock. And I also felt like it was overvalued because of people like us. There were a lot of millennials that love Snapchat. They're like, you know what? I want my first stock to be Snapchat just because I use Snapchat. You shouldn't buy something because you use it. You should buy something because you see how they're going to make money and you believe they're going to grow. I didn't think Snapchat was going to grow. Also, Facebook was already taking all their views. It was kind of unfair what Facebook did with Instagram. They started doing Snapchat started stories and then Instagram copied them. But yeah, I didn't believe Snapchat was going to grow. And since then, it hasn't. Like, started off at $30, $29, and now it's $12. So if you decided to buy Snapchat shares at when it was IPO'd, you would have lost over half your money. So that's a risk. You can lose money, but what you wanna do is you wanna diversify your portfolio. Say you had a bunch of stocks. You had Apple, you had Facebook, you had Google, you had McDonald's, and you had Snapchat, right? All of these other stocks did well. And then you'd have that one bad child, which is Snapchat, that didn't go so well. So you wanna have a bunch of stocks in your portfolio. Most of them are gonna do well, and then there might be one or two that straggle behind. And because you've diversified so much, your average is gonna go up, and that's what you want to do. I've also bought stocks that didn't do so well, but I had a bunch more that did well. So you wanna always have a bunch of things in your portfolio. I think that's the last slide. But yeah, these are some other companies that I bought. And Netflix is my favorite stock of all time because it's made me so much money. And basically, I started watching Narcos in 2016. And I was like, this is such an amazing show, right? And everybody was watching it. Everybody was talking about it. Everybody was watching it. And I was like, because of this Narcos, I think a lot of people are going to get a Netflix account. Because what happened was I asked my friend for his Netflix password, and he said no, he wasn't going to give it to me. I was like, how are you going to tell me no? And you know what I did? I went and made my own account. But it was basically me getting into something, and I did more research on it. And I was like, I got a Netflix account because of Narcos. I wonder how many other people are going to get Netflix accounts because of Narcos. And try to move this way. And it was there's also this other principle when the company goes above a certain point and comes back down, it's probably going to go back to them. So over here, I think it was somewhere Netflix had gone over $100 at this point, and then it went below and on their earnings call. So one day in the year, the company comes out and says, okay, in the case of Netflix, they'll say, oh, we have this much subscribers. We had like 10,000 new subscribers in India. We had 5,000 new subscribers in Europe. And they came out and they said they had a phenomenal number of new subscribers. And that's when the stock overnight, like after they said the call, the stock went from $100 to 120. So based on how and rode this wave, it was gonna grow, right? Netflix was
Okay, I think we lost Dolapo there. He's probably gonna try to. Yep.
yeah, okay. So yeah, I just had faith in it. Sometimes I'm wrong, sometimes I'm right. Hopefully I'm right more times than I'm wrong, and that's the goal in investing. And I was right this time. I made it from 100. I bought it at 99 actually, $99 all the way to 300 and something, and I sold it. And since then it's been kind of consistent around 300 and 370. So I kind of sold it early, but it's fine because I sold it to buy shares in another company. Right? It's different if you sell your shares to spend it, blow it on whatever you want, and it's different if you sell it just to invest in another company. Now, this is another company that also has been great. It's not been as great as Netflix because it hasn't made me like 3 times my investment, but it's pretty much maybe about twice. I decided to invest in Amazon also around here because it had crossed the $1,000 mark and then it went below it. So I was like, it's probably going to go back over the $1,000 mark. So I bought a couple of shares at around 970, and I just rode the wave all the way till it went up to about 1,700, and I sold it just because at that point I was like, all right, you don't do. I made enough money. But I also bought it again at some point, because it's one of those things that you have to evaluate and see, okay, this is a good buy at this time, and then later you might decide this is not a good buy. So I always like reevaluate my stocks, and I reevaluated Amazon, and I was like, yeah, they're still growing because their web services. I did a lot of research on what they do and how they're making money. It's like they're still going to make more money. I bought it at 1,700. It went over 2,000, and it went back down. And then for some reason, I decided to sell it again. So it's just basically information is power, right? As an investor, you don't just go in there and feel like, okay, I like the stock, so I should buy it. You want to do a lot of research. I did the research and I found out Netflix was in a lot of countries, but it had plans to expand into other countries. Right? I bought Amazon because I knew that more people were going to start buying Amazon Prime subscriptions. I bought Boeing because I knew the demand for airplanes in the next coming years was going to be, it was exponential. A lot more people were going to travel in the future. So it's not a guessing game, right? You just got to educate yourself, read the earnings report, read the news on those companies, and it gives you all the information you need. And also, this is not long term. Like if you're trying to get a lot of money in the next 6 months, Abraham will probably talk to you about that. I don't know about that. I make money over years, right? I'm not even talking about dividends in this one, because dividends is another thing that you probably should Google after. I guess I don't have time to go over that. But it's a long-term play, right? But it's somewhere that initially I didn't have a savings account because I put all of my money into investing, which I don't advise you to do. But I mean, that's just how excited I was about doing it, and I was lucky that I made a lot of good money back then. But yeah, it's something you should do with your extra cash, and as you go further in your career, or as you start getting money, you want to put more money into investment because it grows like at such an incredible rate. It makes money for you while you're sleeping, so why not, right? And this is the best time because everything is down right now. I believe they're going to go back up. Don't come and kick me if they don't, but that's just my speculation. You should do your own research to find out if it's going to go up for you. So that's it.
Awesome. Thank you so much for that spiel. You're not off the hook yet, though. So I have a few questions coming in already. But my own personal question was, you were talking about Boeing and how you know right now, because you're an employee at Boeing, so you know sort of certain information that the general public will not know. So aside from actually being an employee of a company, how do you know when the stocks could go up or down? Like, are there specific things that people should look out for? Or is it just sort of, like you said, reading the news or looking at books and stuff? Like, what are some of the things that you've used personally that have worked for you?
Well, before you put me into trouble, I said specifically that I can only buy Boeing stocks based on the things in the news. I'm not allowed to buy Boeing stocks based on private information they share with only employees. And so I only buy Boeing stocks based on things I see in the news. This stock buyback, I saw it in the news. I didn't even hear it like internally. And we also have like a specific window that we're supposed to trade stocks as employees, because within that window they don't tell us any news about the company. So yeah, I don't buy Boeing because I'm an employee. Everything I see about Boeing is because I read it outside. Repeat your question again. What was the second part? I just need to defend myself.
Okay, that's
first.
good. Yeah, because that's illegal.
Yeah.
Okay, let me rephrase that question. Okay, so let's take away Boeing. Just in general, how can one know, what the stock price of a company could potentially be up or down? So are there specific items that people should look out for, I guess, in the financial statements, or specific things that they need to see in the news to know or to sort of have an idea of whether or not the share price would go up or down?
For every company, it's different, right? So for something like Boeing, it was the forecast. The market, I don't know who these analysts are, but they determined that in the next couple of decades, um, air travel is going to skyrocket and it's going to be 4 times what it used to be. So I saw that and I was like, this looks like growth. You're always looking for growth, right? Growth as in the company's going to get more money, the company's going to get bigger, the company's going to get more subscribers, more users. So in the case of Boeing, they were going to get more airlines to buy airplanes. In the case of Amazon, analysts predicted the more people are going to be buying online. And in the case of NVIDIA was going to be selling more graphics cards because more people were going to buy. And so the key is more. Right? In the news, you want to see that there's going to be more demand for that product. In the financial statement, you want to see that year over year they're getting growth, and you can plot that and see, okay, their growth is, in an exponential curve, or if it's flat, you don't want that. You want something that's going up. Right? In the financial statement, if they're going to try a new strategy that you really believe in, say Microsoft switched from Microsoft stopped selling Office, like Microsoft Word, as a one-time deal. They started doing subscriptions, which gives you more money. Like subscriptions give you more money than one-time sale of Microsoft Word. I saw that. That made Microsoft a good buy because they were going to make more money through subscriptions. They were going to sell Game Pass. They were going to sell all these subscriptions, right? So based on my calculations, like Microsoft is going to make more money because they're charging people more instead of a one-time fee. They're going to be charging them for the rest of their lives. So if just anything that you see that means this company is going to be making more money, more subscribers, more demand. So there's a lot of things that you could see. But also stock tweets is something that I use a lot. As I said, it's like Twitter for stocks. People come there and say all sorts of things about stocks. You have to use your filter. So you see someone saying, like, you can open the stock twist for Boeing and see what people are saying about Boeing. And then someone says, oh, Wall Street analyzes that more people are going to be buying airplanes in 2024. They include an article, you open that article. You see another person saying, oh, Boeing is going to die in 2 years. You open that article and you see that, okay, this article doesn't have much substance. This is all gibberish. So you open those articles that people are putting up there, getting as much information as possible and using that to make a decision.
And if this is stocktwits.com?
Yeah, okay. I think .com.
Okay.
Where's it? All right, there it is. Yeah.
Okay. I'm just
gonna. Do you see my video? Do I still have to look good?
Yes, we see you. Okay, so another question here is they're wondering if you've tried indexing as opposed to actively managing your portfolio and what your thoughts are about that.
Like mutual funds?
Well, index funds, I'm guessing that's what they mean.
Oh yeah, I mean index funds are kind of, they're average. My performance does better than index funds, thank you. So I do my own active management because
shameless plug.
Say let's right. Let's give an example. So you invest in the Nasdaq, right? And what are some? I think GE. No, GE is still on the Dow Jones. What's that on my screen? Are you drawing on my screen?
Yeah,
okay, so GE is still on the Dow Jones, right? I think. Don't quote me on that. And then what are some other stocks that? There are a lot of stocks on the Dow Jones, on these indexes, that I would never buy. I would never buy GE. I'd never buy, I wouldn't really buy Ford. There are a lot of stocks that aren't good, but just because they're reputable companies, they're going to keep them on the Dow Jones. So they're going to be dragging down that index. While there's, like, let's say Boeing that's been doing well, and then there's GE that's going down. So it's not doing very well. My personal portfolio, I cut out those ones that I don't believe in. GoPro, GE. I can't seem to remember the other ones, but they're like ExxonMobil, Chevron. They've been doing horrible in the past 5 years. I would never buy those well for the foreseeable future unless something changes. But those companies have been like tanking for the past couple of years, and they're still on the Dow Jones just because of their reputation and how much they mean to the U.S. economy. So if you're investing in the Dow Jones, you're going to keep Chevron, you're going to keep Exxon, you're going to keep GE. Well, I would never do that because I know I don't have any faith in those companies. I only buy the ones I have faith in. Most of my stocks go up. Like I only have a few that's actually gone down. That's actually gone down, and they haven't gone down that much. Like they wouldn't go down consistently. If you invest in the Dow Jones, you would have for the past 5 years you'd have made the gains of Boeing, or you'd have made the loss of Exxon, you'd have made the loss of Chevron. While I would never keep Exxon, if it was losing me money for a year, I'd have cut it off. Right. So personally, I don't believe in index funds. If you don't have time to do all this research, go ahead. They've been going up I think they've had a 10% increase year over year. And I've had some years I've had 30%. There was one year I had 40%. But it differs from year to year. But I don't like 10%. I like a little bit more than that. So if you don't have time to manage your own, go ahead and do index funds, mutual funds. But I like investing in, I like my own research. I don't like paying people to do it for me because I can do it myself. So that's personal preference. If your job is like too consuming, or if you don't find this stuff interesting, because I find it really interesting. So if you don't find it interesting and you don't have time, you might as well like get in a mutual fund or invest in index. But I like it. That's why I keep doing it.
Okay, so the next question is, how do you integrate fixed income investment into your strategy?
Oh, like putting in a certain amount every month. You could. I used to. Well, I don't think I used to, but I just put in money when I feel like it. Honestly, I just look into it. I I look into it every once in a while. If I don't see any good stock that I want to buy, I wouldn't buy any. But if I see a good stock, I don't really sell I don't sell a lot of my shares. So it's just whenever I find a good stock, I put in some more money to buy that share. So ideally, if you go on my channel, you see a video where I talk about if you put in $500 a month into something, which is a good practice. I preach what I don't practice. I kind of put in about that amount, but I just do it at a random interval. But you should like put in maybe $500 every month, put in $200 every month, whatever you feel comfortable with. That is the general practice. That's how you grow your money. Put in a certain percent of your paycheck into investments.
Okay. Thanks for that. There's another question. Okay, so I think this one is sort of aligned with the one I just read out. But if you invest and you made money from the company, do you withdraw the money you have made, or you keep it, not minding the risk?
No, as I said, I had spoken about Netflix. Because I bought it at 99, I sold it up. Not sure where I sold it, but I sold it at a point where it was going down, so I put a stop loss. So I estimate about here, either here or here. I don't remember what year it was, but I sell my stocks. Like when they do their time, I don't believe they're gonna do great forever. Right? They've had their time, and I sell it, and then I invest in another company. Like I don't withdraw it and buy some gold chains. I withdraw it from that company. I leave it in the app, and I buy some other company with it.
Okay. Just for people who are not very familiar with the terms, can you explain what a stop loss means? Just pretty quickly.
Oh yeah, so you can set an automatic trade. So if you're losing, you can set an automatic trade to sell a stock, to sell your shares in a company when that share price goes below a certain level. So I'm hoping you guys can see these numbers. So let's say you had Netflix, right? And you had it and it was around say 300 350, and you're like, I want to guarantee that I make at least $300 on this share. You can set a stop loss for $300, and if Netflix stays above $300, it's not going to sell. But you can set a setting that if it goes below 300, it's going to sell. So you're following this trend and it keeps going down. And as soon as it hits this $300, it's going to sell automatically. So you keep that $300. So that's something I do to some of my stocks. So if I'm not watching it, say everything starts crashing, it's going to sell automatically and I keep some money.
Okay, thank you. Okay, so there's another one here. I think you probably wouldn't be able to answer this, but is there a way to tie trading apps to your tax-free savings account? So this is a Canadian person here, because I don't think the US has a TFSA, right, Dolapo?
I don't know.
No. Okay, so to answer your question, yes, you can. So most of I don't believe Wealthsimple Trade has been able to link it yet. I'll have to check on that, but most trading platforms, most Canadian trading platforms allow you to open a TFSA account and trade with that TFSA account. So you have to make sure that you're opening a specific, like the account that you're opening is specifically a TFSA, because there is a regular trade account that you will be taxed on whatever gains you get on that. But then if you open the TFSA account, then you'd be able to trade within that TFSA account without getting taxed on your gains or any income if you sell. I know CIBC Investors Edge is also a pretty good one. TD Trade, Web Broker Trade. Wealthsimple is also good, but not the trade. I think Wealthsimple currently only allows you to do the ETFs and index funds under the TFSA. I don't think Wealthsimple Trade has gotten the TFSA account set up yet, but don't quote me on that one. Another question here is, I think you already answered this. What are your thoughts on ETFs versus single stocks?
Abram is going to talk about ETFs.
Yes.
Right. I hope so. Yeah, I don't do ETFs because I'm a long-term trader.
Okay. Okay, I think. Okay, so this last question here, pretty quick. How much time do you spend on average every week actively managing your portfolio?
So I don't actively manage because it takes me like a couple of seconds to buy, but I spend a lot of time researching on the stocks I want to buy. And I kind of do it at work, which I shouldn't. Like when I have downtime, I just open up Google and look up what's going on. I'll estimate about 7 hours a week, 5 hours a week. Some weeks are less active than others, but it's also something that I enjoy doing. Like I enjoy like listening to the news, seeing what companies are doing. So I guess the time flies by for me. So I'll say about 7 hours a week. Some weeks more than others. Yeah.
Perfect. Okay, so thank you very much, Dolapo. That was a very good presentation. Please keep the questions coming. I think even after Abraham's presentation, we can also take some more questions if you have any. So the poll results were out, and it looks like 63% of people are beginners. So that's good. This is definitely for you. And then 26% are intermediate. So Abraham is going to go on now, and he's going to be talking more about day trading. And this is